now let's talk about financial aid, and specifically, let's start off by talking about the different types of financial aid. One simple way to categorize financial aid is to think about it in terms of free money, earned money, and borrowed money. And I've specifically put it in this order because that should be your order of priority, meaning I want to get everything free that I can first, then I want to try to earn what I can, and then as a last resort, I'll borrow. So let's talk a little bit more about this free money. How does free money work? Well, in terms of going to college, free money could be a scholarship or what's called a grant. So scholarships typically, by definition, are merit-based, meaning you get a scholarship because you're really good at something. You may have an athletic scholarship, you may have an academic scholarship, or some sort of other specialty scholarship, but it's based on some expertise or in some way you have earned it based on your abilities or your accomplishments. And so I've listed here a few different types. There's some that are specifically for incoming freshmen. For example, most schools have presidential scholarships or something similar where they have basically a full ride package that they reserve for the top incoming freshmen. Similarly, transfer students may have some types of opportunities available to them as well. And these are monies that schools set aside so that they can attract the best and the brightest. And then there's some other national, local, or even just at the particular school that you're attending or department that you're going to be in, they may have some special scholarships. And then you'd be amazed by the kind of random scholarships, maybe churches or other organizations that you may belong to, or even one of your family members. So you've got a lot of homework to do to figure out what scholarships are out there and which ones might apply to you. Then on the grant side, these are not merit-based. These are need-based, based on your finances or the finances of your family. And so those are at the federal level, meaning the federal government may give you money. Those are typically the Pell Grants or the FSEOG grant, which is typically on top of the Pell Grant money. And then the federal government will give you additional money if you don't get all of this money for whatever reason. If you had a parent who served in Iraq and Afghanistan. And then finally, there are some state-based grants that are need-based, and there are some also that are non-need-based. Even at the federal level, if you decide to go to school to teach, then there is grant money available. Now, what about earned money? So earned money means, you go out and get a job. You can get a job on your own, or you can apply for work study. And that's often better than getting a job elsewhere because they can be off campus, but typically they're on campus, they work around your schedule, and it's just a little bit more flexible than a traditional job. Then lastly, if those first two options aren't enough, then you might have to consider borrowed money. And just like the free money, it can be need-based or non-need-based. So if you're looking at need-based borrowing, the primary federal choices are the Perkins loan and the Stafford loan. And so again, the best opportunities are for those who have extreme need, and that's what these are. They have lower interest rates than some of the other options. And then if it's non-need based, meaning you've turned in all your paperwork and it appears that you aren't in such dire financial need as some other students, and your family has the more capacity to pay for your education than maybe the average student or certainly than other students, then these would be the non-need-based loans available to you. So you see here there's an unsubsidized direct loan, and on the previous screen we had a subsidized direct loan. Basically the difference is the interest rate is a little bit higher and the government pays the interest for the subsidized loan while you're in school, but they don't pay the interest for the unsubsidized loan, which means that you may borrow $10,000 and you're in school for 4 or 5 years. At the end of that 4 or 5 years, you owe more than $10,000 because you've been charged interest on the unsubsidized loan. But on the subsidized loan, whatever you borrowed is what you owe by the time you go into repayment, because there is no interest accruing because the government is paying for it. The second one, and we can look at these in more detail, the second one is a loan for parents. This is typically what parents or I guess we could say wealthier parents would use to pay for college for their children if they for whatever reason didn't set money aside and they make too much money for the child to be eligible for the grants and other programs that we saw. So this is one where actually the parent is the borrower as opposed to the direct loans that we looked at. So lots of resources out there for you to look up scholarships, look up loan options, and other ways for paying for college. But now you've got this general overview of the various types. So again, think about them in priority order. You want free money, then earned money, and then borrowed money. And there is federal, state, and local money in addition to all of the different scholarship opportunities that are out there.